Hi, everyone. Good afternoon, and welcome to our webinar, Understanding the Current State of Healthcare Payments with InstaMed. This webinar is the first part in our collaboration between CAQH Core and NACHA, and thank you so much for joining us today. So running through the agenda, we'll start off with an overview of NACHA, and then we'll jump into an overview of Core and the payment and remittance operating rules. Then we'll have an overview of InstaMed, where we'll cover the trends in healthcare payments annual report. Then we'll have a conversation between our speakers, followed by a question and answer period. Some logistical items. You can download the presentation slides now from the handout section of the GoToWebinar menu. You can also download the presentation slides and recordings on the CAQH Core website after the webinar. The webinar slides and webinar recording will also be emailed out to all attendees and registrants in the next 1 to 2 business days. If you have any questions for our questions and answer period, or any technical issues, please submit those in the questions box on the panel to your right. I want to give a big thank you to all 3 of our speakers today. Joining us, we have Deirdre Ruddle, who is the CMO at InstaMed and Head of Wholesale Payments and Healthcare Marketing at JP Morgan. We have Brad Smith, Senior Director of Industry Engagement and Advocacy from NACHA, and Aaron Weber, Director of CAQH Core. So with that, I will pass the baton over to Brad.
Hi, thank you very much, Daphne, and thank you for having me here. If we go to the next slide. NACHA recently had a research group conduct a research payment study for us. During some of our work in different industries, we realized that maybe people don't know what ACH means. So we commissioned them to find out and talk to consumers and conduct focus groups about what ACH is, what do they think ACH is, do they use ACH, etc. And what we found is, like, the general public, they don't know the term ACH. So I'm going to give you guys a couple of minutes here to give you an idea as to what ACH is. In case you don't know, I mean, you guys might know, but ACH is the network that runs direct deposit. I'm going to guess that everybody on this webinar today gets direct deposit in some shape or form, whether it's for payroll, whether it's a tax refund, whether it is your EIP payments that came from the government last year. You also probably use ACH for bill pay. So if you have a recurring debit that comes out for your mortgage, for your rent, student loans, whatever it might be, those are all ACH. Some of the common terms that we found that people understand better are electronic bank transfer, account transfer, electronic transfer, that sort of thing. But today we're talking about ACH. And NACHA is the National Association for the ACH Network. We own and are the stewards of the ACH Network rules. We modify the rules, enforce the rules, create new rules, innovate on top of the existing rules. We are managed by our members, and our members are some of the largest financial institutions in the country, a lot of payment processors, and some fintech companies, all working together to improve the ACH network and create continued growth of volume. Next slide, please. So as you can see, the ACH network is thriving, and you can see the growth that we've seen since 2011. In the last 6 years, we've seen at least 1 billion more ACH transactions added to the network each year. Last year, so 2020, our ACH volume number of transactions going through the network was 26.8 billion transactions. The dollar value for all those transactions is about $62 trillion. We've seen steady growth. I mean, I've been doing this since, I don't want to even say when, and I think we've only had one year of declining growth. I'm not even sure if declining growth is a term, of a decline in volume, and that was in 2008 during the recession. But we've seen tremendous growth over the last decade or so, so we're pretty pleased with that. Next slide, please. So looking at 2021, look at 2021, is there a missing slide? Is it next to maybe? There you go. In 2021, we've seen good growth in the first quarter for 2020. When you compare it to first quarter of 2021, we've seen good growth if you compare it to the first quarter of 2020. B2B payments are up 17.3%. So these are your business to business payments. The healthcare payments that you see in the middle are actually part of that B2B volume. But due to the way that the healthcare payments, the healthcare EFTs are formatted and put into the ACH file, we're able to pull those out and identify them uniquely. So we saw 1.2 billion of B2B payments in the first quarter. Direct deposit was up 17%. Healthcare payments, yay healthcare, up 9% over the same quarter of last year. Internet payments are where you're going to see most of your ACH debits due to online banking or online bill pay, I should say. And then P2P payments are up a ridiculous like 72%. I don't know if last year during the shutdown that people realized that they don't have to give cash and checks to each other, that they can use PayPal and Venmo and Zelle and Square Cash instead. But that growth number is pretty incredible. And what we can do here is compare, like the first quarter of 2020 was quasi-normal, right? We didn't have any real impact to us, right, as a country until the second quarter. So this growth is real, and this is what we're looking for each year. Now we can go back one, Daphne. So when we talk about healthcare EFT volume, and this is actual volume that we can track on a monthly basis. And you know, the chart looks pretty normal. If you look at other years where we track the volume on a monthly basis, it kind of ebbs and flows, but you can see that April and May from last year really stand out as reduced volume, and that's obvious, right? We were on complete shutdown coast to coast, and nobody was visiting dentists or doctors during that time. But what we found by the end of the year is that volume had still grown overall by about 5.4%. So those are the numbers that we're looking at. Now, we do have May 21 numbers, so we just got the May of this year healthcare volume, and they're actually up 43% over May of last year. And like that sounds like a big number, but you know, May was so low in comparison to other years. May was down 19%. May of 2019 was down 19% over the previous year. So what I'm saying is volume's still good. We're still seeing highly increased volume from healthcare EFT, and this is something that we're also looking for, and you guys should be proud of. I think we need 2 slides here. There you go. So each year, CAQH conducts the CAQH Index report. And the 2020 report came out early this year, but it's based on 2019 volume. So during early 2020, CAQH begins this research and polls the dental plans and medical plans and has them fill out a survey asking a lot of questions about volume for EFTs, volume for ERA, etc. You can see that first arrow shows you the healthcare industry EFT volume went up 5.4%. That's our number. That's a NACHA number that we get right from statistics from the ACH operators. The middle green arrow is actually from the 2020 CAQ Index. It's based on 2019 volume. Medical EFT volume was up 3.4%. That's very good. That's just medical. That's not taking into account anything else. And medical EFTs comprise 68% of all claim payments, which again is a very good number. There is room for more EFT. There is room for more cost savings by switching from virtual card and check for claim payments out there, since there's only 68%. So continue to ask or seek out the opportunity for EFTs in that medical space. You guys are doing great. Now the dental, here's the success story here. The dental EFTs, and as we said when we read this internally, it was like, yay dentists, right? Because dental EFT volume, was up 93%. So the downside is, the real story is that it's only 23% of all claim payments are made by EFT. But the volume went from 12% in 2018, which was in the 2019 report, to 23% of all payments in the 2019 volume in the 2020 report. Huge growth. Don't get me wrong, this is a fantastic move forward, and I plan on taking full credit for it, although it's not really up to me, but I'm telling my manager that it's all my credit. It's us and others working with the American Dental Association. It's working with the National Association of Dental Plans and raising awareness. One more thing, by more EFTs being in the network, the dental industry as a whole was able to spend 30% less on claim payments than the year before. So if we're adding that number of dental EFTs into the network and saving or spending 30% less, I think that's a huge win and a great opportunity and a great message for the dentists out there and the dental providers out there to ask for EFT and see how you can get EFT implemented at your organization. Next slide, please. So what we're looking for, I'm looking for success stories. I'm looking for medical providers and dental providers that have recently switched, and I say recently, over the last 2 or 3 years, recently switched to EFT instead of virtual card and check payments, and what results you have found. I would love to share that story. I'm sure that you would love to have that story shared. My phone number is here. My email address is there. Feel free to reach out to me if you do have a success story. Feel free to reach out to me if you have questions or concerns. I'm glad to speak with you. I can put you in contact with other dentists, specifically for you dental providers out there that have had success and know what to say and how to talk to their processors and help you guys get on your EFT journey as well. I'm going to hand this over right now to Erin. She's the director of Core. She's going to do a CAQH Core overview, and it's all yours.
Thanks, Brad. And I know Brad is very excited about the dental industry's progress with electronic payments. We are actually going to do a joint webinar as a follow-up to this session later in the year with a dental provider to talk about more in detail the benefits of moving to fully electronic transactions within the dental industry. So be on the lookout for that invite in a couple months. I'm going to give a quick overview of CORE, although I'm going to assume that many of you are familiar with who we are. We are the HHS designated National Operating Rule Authoring Entity. We have participating organizations from across the industry who come together to develop operating rules, which are business rules that sit on top of industry standards. We see our role not only as the convener of the industry to develop and vet operating rule requirements, but we also drive adoption through industry and outreach efforts like this one. We measure impact, and we have a certification program to help organizations demonstrate their compliance with the operating rules. Next slide, please. The CAQH Core currently has 8 sets of operating rules available for industry implementation. Today, we're really focused on that third row in this slide, those payment and remittance operating rules. Those rules are federally mandated and have been since 2014. They support the HIPAA-mandated 835 remittance advice transaction and the HIPAA-mandated healthcare payments transaction, which is the NACHA ACH that Brad just mentioned. Next slide, please. Just to give you all a little bit of background and information on the EFT and ERA transaction flow and why operating rules are and standards are so important in this space. EFT and ERA are a little bit unique in that they flow separately between the health plan and the provider, often through intermediaries like vendors, and for EFT, the banks, to the provider. And then providers are responsible for reconciling or reassociating those EFT and ERAs together to ensure that they have received both the payment and the remittance or the receipt associated with that payment, so they know which claims that they have been paid for. Back when we were developing the EFT and ERA operating rules with NACHA, we heard about a lot of pain points throughout this process that were making it very difficult for industry to automate reassociation, but also there were many parts of this process resulted in barriers for both providers and plans to adopt electronic transactions for payment and remittance. Next slide, please. So the CAQH core payment and remittance operating rules, there are 5 operating rules. The first operating rule is an infrastructure rule for the 835 remittance transaction. And that is similar to all of our operating rule sets have infrastructure rules. They include requirements around connectivity, acknowledgements, companion guides, and in particular, this rule includes some requirements around helping organizations transition to electronic payments in time to make the change from paper to automated remittance. The second rule I want to highlight is the reassociation rule. This rule addresses the provider, ensures providers are receiving the information and the data they need on both the EFT and the ERA transactions to successfully reassociate those transactions. I remember when we were developing these rules, providers in our subgroups were complaining that they weren't getting that information from their health plans on the EFT transaction. And plans were saying on the same call, but we always send that information. And what we figured out, because also the financial services industry was engaged in development of these rules, was that there was no requirement within the financial services industry to keep that information on the EFT when it was delivered to the provider. So in those operating rules, there are requirements around health plans notifying providers that they need to request this information from their financial organizations and requirements for providers to do that. There's also some requirements around resolving late and missing transactions. Another barrier we heard to participation in EFT and ERA, particularly among providers, was the challenging enrollment process. Each organization had different requirements, different data needs to get a provider up and running with electronic payment and remittance. So these 2 rules standardize the data elements required to enroll in EFT and ERA and require a health plan to offer electronic EFT enrollment so that it doesn't need to happen via paper, and offers a way for providers to specify their preference in how payments are made via TIN or NPI. And finally, our last rule was specific to the 835 transaction, and this is the uniform use of CARCs and MARCs codes. These codes are the denial and adjustments codes that are included on an 835 transaction that help a provider understand why a claim may have been denied or adjusted. There are a lot of code combinations out there to be used by the industry, and this rule creates 4 common business scenarios with sets of codes within each business scenario that a plan can use to convey this information to a provider. And it helps ensure that there is consistency across how the plans are explaining a denial or adjustment to a provider, and makes it easier for providers to automate this process. Next slide, please. So I spoke a little bit about some of the benefits of the operating rules already, but you can see here there's a number of reasons these rules were developed, and they are helping the industry in many different ways. They have helped with that reconciliation process. They are helping providers target payment issue follow-ups through better use of those codes. They have standardized the enrollment processes and improved cash flow through the receipt of electronic transactions. Next slide. As Brad mentioned, CAQH conducts an annual index to track the adoption of these electronic transactions. Brad shared a lot of the findings from the CAQH Index related to the EFT transaction this year, but I want to highlight some of the remittance advice progress the industry has made. In particular, you can see on this chart that Fully electronic transaction use continues to increase. Since 2018, we've seen it go from 48% to 57%. Partially electronic, part of that increase in fully electronic, you can see is offset by a reduction in the use of partially electronic web portals. So that is a positive, because we hear from many providers that it is a challenge to log into multiple portals for all of the plans that they are working with. You can see the fully manual use of this transaction is relatively low compared to some of the other transactions. So still a lot of progress to be made, only at 47% or 57% fully electronic here, but steady progress over time. Brad touched on the dental industry. Dental plans are also showing an increase in adoption year over year, rising about 3 percentage points to 25% of transactions occurring, remittance advice transactions occurring electronically. So right in line with the number Brad shared around EFT, and there's a continued push to help the dental industry continue to drive towards greater electronic transactions. If you think about the amount of money and time and resources spent on managing manual and partially electronic transactions, combined, the medical and dental industries are spending about $7 billion on remittance advice transactions. And this is the second highest transaction expense after eligibility and benefits in the CAQH index. So there is opportunity here to reduce these high costs through greater automation of transactions. So with that, I am pleased to introduce Deirdre, who is going to share some really great data that InstaMed has been collecting over the last, I think this was your 11th annual report. And so we're very excited to hear from her and look at the information they've collected related to consumers, providers, and payers around electronic payments.
Thanks so much, Erin, and thanks to this audience for being so interested in the trends in healthcare payments. So as Erin mentioned, this is an annual report that we publish typically in the first half of the year. This year, we actually published it the earliest we have in probably the report's history at the end of March. We really felt that it was important to share what happened in 2020 that was the result of surveys to providers, payers, and consumers, as well as data from the InstaMed platform representing billions of dollars of healthcare payments, every transaction type. And so today, I'm going to give a brief overview of the report from the lens of consumers, providers, and payers. You know, at InstaMed, we believe that you really need to look at healthcare payments through the lens of all three parties that are involved in the moving of money and data to truly understand what's going on in the industry. And so we're going to start with consumers, and we'll talk about some of the things that have emerged, as well as some of the bleak things that are happening for consumers, which all of us on this call are likely healthcare consumers. So if we go to the next slide. So one of the baseline things that I think is important to think about when we think about life after 2020. I did not say life after the pandemic because I think that is very much an evolving statement. But as we look at life in 2021 and beyond, one of the things that I think is really important and the data shows is that we were already in a very digitally saturated world, and 2020 served to increase that even more significantly. And so when you think about even your experiences in 2020 and, whether you were using, your phone or, connectivity to the internet as really your lifeline, you can see that, over half of Americans said that the internet was essential in 2020 during the COVID-19 pandemic. Additionally, more money is moving on, online through e-commerce than ever before. When you look at the growth in the second quarter of 2020 versus the year before. And, these types of movements to even more digital activities, even more e-commerce, almost 7 out of 10 consumers worldwide think that these shifts will be permanent. And when you look into the data even more, it's really about their expectations are permanent. And let's go to the next slide. And one of the things that you'll also see here as we look at this specific to healthcare is that there were some pretty significant digital shifts in healthcare in a very short amount of time in 2020. The pandemic forced things like telehealth to grow and be utilized significantly. And in some ways, it really shows that the healthcare industry is capable of adopting technology, utilizing technology in a very short time frame, as opposed to some legacy approaches or myths that exist in healthcare that say healthcare is behind the times or is 10 to 20 years behind the technology adoption of other industries. 2020 showed that that's not actually the case, and it doesn't have to be. And I think even more important than that is that the telehealth experiences that consumers, patients, and members had were seen as very positive. They were seen as convenient. They were seen as things that met consumer needs at a time. And you'll see in the data that we go through in a little bit, they don't want that to disappear. This idea of convenience, this idea of more personalized experiences that were brought on in 2020, they're likely not going to go away, and consumers certainly don't want to see them go away as we move forward. So if we go to the next slide, in addition to the digital surges and the experiences that people are expecting from healthcare, I also think it's important that we remember the baseline of the affordability of healthcare in the United States and the worry and anxiety and frustration that it often causes. And I think that I bring these up, and the report brings these up, because they're important sentiments that are coming from consumers that influence how consumers look at what they're getting out of healthcare in this country. And so when you look at these stats and you see 2/3 of Americans worried about unexpected medical bills, that certainly makes sense as you look at 50% of Americans, fearing bankruptcy. And I think the most telling and sobering stat, when we think about affordability in light of the pandemic, is that, you think about the number of cases and the unfortunate number of deaths that were associated with COVID-19. Likely 1 in 7 Americans avoided care due to the costs or the anticipated cost around that. And so those numbers were likely even higher, directly attributed to the fear and the anxiety that medical bill cost in America has over people. So if we go to the next slide. And so when we look at, how do consumers feel? What are patients thinking? What are members thinking? It's pretty staggering to see that 80% or 8 out of 10 consumers were either surprised by a medical bill. And that surprise comes in multiple forms. And, whether it's getting a bill for more than expected, getting a bill, even, just getting a bill. Right? There wasn't the expectation that it was coming, or worse, or even worse, being sent to collections. And when we look at the fact that, in surveys that are done by United Healthcare, when you look at defining the terms that are basic to healthcare, it hovers between 9, 10, 11% of Americans can define basic terms such as copay, deductible, coinsurance, and out-of-pocket maximum. So all of these, factors are creating consumers who are patients, who are health plan members, coming, looking at healthcare from a perspective of confusion and frustration that's, really starting from a negative place. So if we go to the next slide. So I talked about this a little bit before, that quick shift in 2020 to so many, digital experiences, contactless experiences, sure many people, most people on this call could talk about some new digital experiences they had in the pandemic. But when we look specifically at healthcare, that point of view, consumers' point of view about what they expect, past 2020, 3 out of 4 consumers expect telehealth to be an option in the future. And even more than that, expect contactless experiences, such as checking in to, an appointment through a mobile device, your own mobile device, or online payments or online notifications, things like that. Those contactless experiences that dominate our experiences in other industries are now becoming absolutely an expectation in healthcare. So if we go to the next slide. So now we're going to switch, this is a rapid look at the trends. We're going to switch perspectives and look at the provider trends. What's happening with providers of all sizes, within the 2020 timeframe, and how their sentiments and look at the industry has evolved. So if we go to the next slide. So this, we're going to start with a little bit of, sobering news also is, there are so many disconnects that exist in the healthcare payments ecosystem. And again, you look at it from the perspective of providers, payers, and consumers, and you see that there's, disconnect and often friction that is happening among these parties. And a lot of it has to do with, expectations that aren't managed the right way. So on the left-hand side, you see that almost half of providers think that their collection efforts have no impact on the patient experience. And so, certainly the point of care and the relationship with a provider and things like that, have a huge impact on patient satisfaction and patient loyalty. But more and more, everything around that patient encounter, becomes more and more important to consumers, especially in a world that we live in. As we saw, digital experiences just continue to grow. And so then you look at the right side and you see that over half of consumers would consider switching providers for a better healthcare payments experience. And so you can see this disconnect in, providers not seeing the full patient experience as, really influencing patient satisfaction and patient loyalty, and, consumers showing that they will think about making changes to have that better experience, really end-to-end experience. So if we go to the next slide. Again, this idea of expectations and those expectations not being met. We think about, how we pay our household bills, how our cell phones are paid, how our cable bill or our internet bills are paid. They are typically all done electronically. And yet in healthcare, we're still so bogged down by paper. And, there's, huge missed opportunity for providers and health plans to deliver the experiences that consumers are used to for other household bills, as well as their preferences, right? 66% of consumers are receiving medical bills in the mail, and yet, only 14% of them actually want that experience. And when you look at the fact that when you look across all industries, 86% of consumers are paying recurring bills online. Those are the types of things that we should absolutely be pushing for in healthcare, because, it drives a better experience, it drives costs down, and ultimately it takes, so much of the waste that exists in the industry out, eliminating that paper and, the things that Aaron and Brad have already talked about in terms of the benefits of electronic transactions. So if we go to the next slide. Again, I'm likely not sharing any information that's unknown to this group, but there were certainly, financial impacts to provider organizations of all sizes in 2020, due to the shutdowns and everything that happened with COVID-19. healthcare spending down 2%, as well as, major losses in the hundreds of billions of dollars projected for hospitals and health systems. And then, of course, lower patient volume through the year. I think these are important things to remember as we look at, the recovery period post-pandemic, as well as what are some of the things that, can help to mitigate some of the risk and financial impacts of, scenarios like this. Hopefully nothing like this for a very long time in terms of the pandemic, but other financial ways to safeguard against the unknown. So if we go to the next slide. And so, those financial impacts for provider organizations are certainly shifting perceptions and shifting, the concerns of providers. And, revenue cycle concerns around the pandemic, both, the decrease in patient volume and everything associated with that, as well as close to half of providers relying on outside funding to remain in business, through the various types of funding that were made available. All of these things are, what is, the baseline of, post-recovery, what 2021, 2022, even 2023 will look like for provider organizations. So if we go to the next slide. And so again, to tie this back, around the electronic transactions, moving data and funding, moving money electronically, there's so much opportunity, within the healthcare payment space to get away from manual and the paper payment methods that more than 9 out of 10 providers rely on. And that paper experience, bills in the mail that aren't automated, that aren't using electronic payment methods, that's one of the reasons why 63% of providers say, report that it takes over 30 days to collect after a patient encounter. When you think about that versus, other industries like the hotel industry, where payment is collected immediately at the end of the stay, or, other industries, there isn't this idea that providers, in essence, have to become lenders as, 30 plus days of outstanding bills for patients. So there's tremendous opportunity, and I think that the data showing that consumers are certainly hungry for these more electronic digital experiences, and the benefit to providers and ultimately payers can be significant. And if we go to the next slide. So now we're going to quickly wrap up this portion of the webinar and talk about things from the payer's perspective, health plans perspective. And if we go to the next slide, we can see that there was certainly the pandemic had major impact on health plans, on payers, and there was a shift in contactless experiences and contactless payments for health plans, similar to the shift that happened with providers. And when you look at the ways that premiums are collected, or ways that health plans are helping their members to pay their medical bills to providers and things like that, there was certainly a surge of contactless payments in 2020. And again, the momentum and the satisfaction of consumers around that is something that we believe will just accelerate in coming years. And so if we go to the next slide, so let's shift, we've talked a lot about the consumer piece of things, but there's also, of course, commercial payments, B2B payments. And, what the data shows, and it's shown for multiple years, is that, there still continues to be too much paper in claim payments. And Aaron showed, and Brad showed these stats, and there is growth, but there's also just tremendous opportunity to get to that place of 100% electronic payments. And, even though the operating rules have, been in place for many, many years, we still see that over half of providers can enroll in ERA EFT from one or more of their payers. And, and then on the flip side, 62% of payers are, paying providers with, paper option, paper payments like checks, or fee-based options like fee-based virtual cards, or, fee-based ACH and things like that. This is a pretty harsh reality of things that are impeding progress to get to that that 100% adoption of ERA EFT, which, I think many people on this call should, would agree that it isn't this, absolutely unattainable goal. If the industry really focused on this, it could absolutely happen and all stakeholders would benefit. And so if we go to the next slide. Again, when we look at the experience around claim payment, when ERA EFT is not the dominant payment method, whether it's opting out of virtual cards, making, over half of, only half of providers, or you could say half of providers not actually being able to easily opt out of those payment methods, or strong dissatisfaction with the fees associated with that, or just overall sentiment of 61% of providers thinking that the opt-out process was cumbersome and difficult. These are the types of barriers and friction that, if we could eliminate these types of things and really drive towards paths that are ERA EFT centric, we could certainly take a lot of friction out of the industry. And so if we go to the next slide. So, in conclusion, we see that there is a, very strong sentiment, again, from consumers, providers, and payers, that electronic payments, digital experiences, and a move from paper, manual-based processes, needs to go away. And I think that, the disconnect is getting all of these stakeholders aligned and saying, okay, we all want the same things. How do we do that? And I think that 2021 and beyond offer a unique opportunity, after what we experienced in 2020, to show that healthcare can, move electronic, move to more digital experiences, and then, subsequent to that should be a shift to more electronic payments, electronic data flows, and ultimately that better experience for everyone. So if we go to the next slide. The Trends in Healthcare Payments 11th Annual Report is a pretty robust read. This was just a quick preview of it, but if you're interested in learning more, you can download that report free of charge. And certainly if there are any questions around that, feel free to reach out to me personally. I love to talk about trends, and appreciate the time to engage with this audience.
Thank you, Deirdre. Hi, everyone. I'm Jessica Porras. I'm the Senior Manager at CAQH Core, and I'm delighted to have a few minutes to talk to our speakers a little bit more in depth about the topics they've been covering. Deirdre, your last slide was a perfect segue to my first question, which is a question for everybody. So as we saw in that presentation, especially that last slide, health plan executives want to improve the patient experience. Providers also prefer EFT from payers. So given that there's this desire to move the industry towards electronic payment methods, what have been the barriers to adoption for both consumers and providers?
Erin, do you want to start that one, or do you want me to?
Yeah, I can start. I mean, I think back to 6 or 7 years ago when we were developing the operating rules, and the barriers were significant. It was difficult to enroll. It was difficult to ensure systems were set up to support electronic payments. And I think a lot of that has been addressed over time. I think there's still, particularly among smaller providers, a reliance and a trust that is there with paper checks that just doesn't seem to go away, even though many of us are adapting to using electronic transactions in other aspects of our lives. So, you know, I think some of it's just smaller providers and moving things on, and I think the dental industry is a good example of that as well.
Yeah, this is Brad. I think that when you guys started writing those rules, what, 2013, I still think mobile payments and electronic payments were still in their infancy, I mean, especially mobile payments. But I think now consumers are much more apt to adopt a new payment type. I think they're pretty comfortable with their phones, right? We see Starbucks with QR codes and Kroger Pay and Walmart Pay. So I think that people are a little bit more comfortable with that. But in the dental industry, I think that I think the adoption, and let me know if I'm getting ahead of the cart ahead of the horse here, but I think the adoption by the dentists is not really restricted by consumers. I think it's those smaller practices, like you said, are fine with the check, right? It works. Like, why change something if it works? The virtual card will work, the check works. You know, they're small businesses. They just want to run the business. So I think that's part of the slower adoption by dentists. But I think with the cost savings that's available to them, I think we can probably convince the dental providers to make that switch.
Thanks, Brad. And, you know, I did want to talk to you a little bit about the dental industry. And you know, answered a part of my question, but it's nice to see that they're making so much progress recently. So that's gratifying.
Mm-hmm.
A follow-up question for Aaron. While the national mandate for the EFT and ERA operating rules has been in place for a while, for 7 years, we've seen that the adoption rate for ERA stands at 57%. So from your perspective, what barriers are still there to adoption? And what challenges are remaining?
Someday we'll all get used to unmuting ourselves. I think one of the challenges that we saw in the data this year was that transition from portals, those partially electronic transactions, to fully electronic transactions. In the CAQH Index this year, the medical providers reported that on average, it takes 8 minutes to process a remittance advice transaction manually compared to 2 minutes electronically. That's a big difference. That's a lot of time saving. The dental industry providers said they spent 9 minutes processing manually compared to 3 minutes electronically. So both industries could save 6 minutes per transaction from switching from manual to electronic, and 3 minutes from switching from partially to fully electronic remittance transactions. And when you start to think about volumes and staff time, you know, you can see that there are advantages to making that change, but like Brad said, a lot of this is ingrained in the workflow of the organizations. And so identifying new workflows and new processes takes time.
And at the end of our presentation, we do have a resources slide. So if you need a place to start, that slide might be helpful to our audience. Brad, I have a follow-up question for you. As online payments from mobile devices and third-party applications continue to increase, how are NACHA's data security requirements evolving?
Yeah, we've always been acutely aware and cautious about data security. But I guess it's been 2013, we implemented new data security rules, specifically about data at rest. I think the data flowing from point A to point D or whatever it is, I don't think that's a problem. I think it's the data at rest that's the issue with data breaches that we've seen from cards and others. So we have enhanced our data at rest requirements. So there are requirements from all touch points within the ACH network, where there need to be procedures and policies and audits of the way data is handled and managed. Now, any organization that originates 6 million or more ACH transactions per year, starting June 30th of this year, that data that's at rest, that's stored, must be masked or double encrypted, or however, it's normally encrypted, but encrypted again. I think the hashing or the hiding of that data is important. This way, if it does happen to be breached, right, because it's stored most likely in the cloud, it will be useless to the bad actors who get it. The enforcement, we've delayed this 1 year, and enforcement of this rule will not occur for 1 year. So that doesn't mean you shouldn't do it, but you need to secure that data as a larger originator starting June 30th of this year. If you originate 2 million ACH transactions per year or more, then June 30, 2022 is when you need to secure that data. So we take it very seriously, and these also align with PCI requirements. So if you do card transactions, you have very similar requirements today.
That's really helpful to know, because it seems like there's news about a breach, every other week. So great that those rules are going to be, they're in place and they're going to be enforced next year.
Mm-hmm.
So a question for Brad and Deirdre. I know that at CAQH, we still hear from providers who are being charged fees for the ACH payments by either the payer or an intermediary. What would you say to these providers? What can they do if they don't want to be charged those fees?
Speak up. I think the cost of doing business is going to incur some fees to processing ACH. It's not free. But if you feel like you're being unfairly charged, then I think you need to go back to whoever's processing those payments for you and explain to them, this is the same cost as other payments you send me, and we're well aware that ACH is a low cost network. So why?
Yeah, I think that's, spot on from my perspective too. I think that, again, and it goes to the earlier questions around, what's been a barrier to adoption, or, why are we at the 57-ish% range for ERA, EFT overall adoption. And I think that, this is about speaking up in terms of making sure that ERA, EFT is delivered at a reasonable cost, and not losing that momentum. I think some of the barriers at this point, we've worked through a lot of our hurdles in terms of enrollment and, comfort with, electronic transactions and things like that. But what happens is it's, whether it's the last mile or the last 2 miles, there isn't enough focus on that, and potentially not enough loud voices around that say, where is the alternative for ERA, EFT, as opposed to these other payment methods that still need to be important. Even though the rules have existed for a long time, there's still, as we've seen in the data in this presentation, there's still tremendous opportunity that ultimately, benefits everyone.
Yeah, and I just add to that, Jessica, I see we have a question in the chat also about the prevalence of these fees being charged. I can't speak to that, but I can say that we regularly still get inquiries on this topic. And when we do, we send organizations either, like Brad said, back to speak with their vendors, but also, there is a requirement that says that organizations cannot charge excessive fees for all of the HIPAA transactions, including EFT. And so another option is to go to CMS. They have an asset tool, ASSET, where you can file complaints as an organization. And CMS typically works with organizations to resolve those complaints through a kind of constructive discussion between organizations.
That's very helpful. So one last question for all of our speakers. From a regulatory perspective, how do you think the surge in telehealth over the past year will affect healthcare payments moving forward? And are there any hurdles that we need to resolve in order to continue the use of telehealth?
I can just start off and say optimistically, I hope it means that both the providers and patients are getting more comfortable with using electronic, care, so electronic payments as well. It's where the industry is headed, and I think telemedicine is just one more entryway into doing things electronically.
Yeah, I couldn't agree more. I think I see this as a, very optimistic, or I come from a place of optimism in that, the telehealth, certainly there are things to figure out in terms of the payment piece and things like that, but the comfort level with digital experiences should also usher in a comfort level with electronic payments and electronic notifications and things like that ultimately move the industry forward. And I think I can't remember the exact stat, but the number of, or the percentage of people that were satisfied with telehealth after their first usage and willing to use it again is sky high, right? And so I think that it shows people absolutely crave that convenience and ultimately positive digital experiences in healthcare.
Right. How could it not be positive, right? You don't feel well. You don't want to get in your car and drive or be driven. And I think I agree with everything. And I think the digital thing will be a big deal. Like if they're comfortable with seeing a doctor on their phone, then they're going to be comfortable making a payment on their phone. I also think it might turn into more doctor visits, quote unquote visits, and maybe result in more volume, more payments. That's very one-sided view, obviously from NACHA perspective.
Very well said, and I appreciate the engagement of all of you in the short time that I was able to spend with you. Thank you so much, and I will send it back to Daphne to close out the webinar.
Thanks, Jessica.
Thanks, Jessica. Time flies when you have such great speakers, and it seems like we're coming up on the end of our hour today. So I want to quickly get into some of the upcoming education sessions and events that we have planned for you all. On July 9th, we are partnering up with WEDI for a telehealth webinar. We'll be discussing state and federal policies regarding telehealth, the evolution of telehealth, and challenges with integrating telehealth into care services. And we have a slate of speakers from the AMA and from UVM Health and so forth who will be joining us. In August, we have a webinar on the 18th. We're partnering up with Health Trio and discussing the prior authorization operating rules. So we hope that you will join us for those two webinars. Jessica had previously mentioned some implementation resources that might be helpful. So if you download the slides right now, each of these links are actually clickable, but you can also navigate to the core website and find these implementation resources there. So the first two resources are sample letters with instructions for providers on how to request payment via EFT, and then the next three resources are from NACHA and provide a general overview of how to request electronic payments and provide an overview of different challenges and useful tools for providers as well. So with that, I want to give a final thank you to all four of our fantastic speakers. Thank you for your thoughtful and substantive discussion today. And I hope to see the rest of you all join us soon.
Thanks all.